To the discuss on today's edition of the program. The market have been reacting to the decision of the Central Bank of Nigeria to, increase the monetary policy rate by about 50 basis points to 27.25%. And yesterday we did see the Nigeria exchange react to that decision. As you know, the stock market dipped by 0.47%. And that will be the focus of our discourse on today's edition of the program. And my guest, who is an investment analyst in the person of Donatus Umana, will be joining us after, I believe he is already here with us. Good morning to you, Mr. Donatus. How are you today and how is Lagos today?
All right. Good morning, Amaka. Lagos is fine and I am fine also.
Thank you very much for joining us on the program today. I just will want to begin by getting your reaction to, the performance of the NGX at the close of trading on Thursday, where we did see, the market end in the negative. Obviously, we did see a dip by about 0.47%, and we also, did see some major stocks, record significant losses. Stocks like Okomu Oil, stocks like Cadbury, as well as Caverton ended the day in the bearish sentiment. But let us just get your general overview of why this is the case and whether or not this has any relation or relationship with, the increase in the MPR on Tuesday.
All right. Thank you for always having me. It goes without saying that it's actually a sentimental case when it comes to the release of the MPC meeting, the interest rates in relation with how the NGX perform. Now, if you don't mind, I'll take you back memory lane a little, just to buttress the point of how the interest rates affect, or will I say correlates in a way with the market. Now, you will remember in July 2023, when the interest rate was hiked from 18.50% to 18.75%, that the interest rate affected the market. The day after that, market closed on a negative. Also on the 27th of February, which is 2024, we saw the massive and aggressive increase in interest rates by Yemi Cardoso, who was the newly appointed CBN governor, the 400 basis points. And we saw a 22.75% in interest rates. And the day after that, the market closed negative. Subsequently, March, 24.75%, and 150 basis points increase. The market also closed on a negative the day after that. And then, so May and July, the same thing printed out, saying that the market closed negative. And then we saw similar outcome play out a day yesterday after the previous day announcement of the increment in the interest rate from 26.25 to 26.75, and we saw the market printing a negative. Well, I would say it's sentimental because, as you can see, it has been following that trend. Announcing of interest rates, a negative outplay the next day. Announcing of interest rates and a play of negative the previous day. So I would say, all putting all this together, I would say it's just a sentimental outcome.
Okay, when you look at the stocks that recorded, the bearish sentiment mostly, or that were largely impacted by the dip recorded yesterday, there are mostly, consumer goods stocks, speaking of Okomu Oil or Okomu Oil Palm, as well as Cadbury and Caverton. Is there a particular reason, as to why the stocks that were largely affected are consumer goods stocks?
All right. Okay. So to clear that air and correct some facts, I would say it's not just the consumer goods stock that we are affected. As you can see, Caverton is not practically a consumer goods. It's into the business of maintenance. Mostly they do what's called aircraft, airplane maintenance, and the rest. So it's a general outplay, I would say, where the consumer goods, as you can see, this morning, I had a report that a bag of rice is going for as high as 100,000 and above. I mean, you would expect the play on this. You would expect the play on this. If the prices of consumer goods generally rise, you would expect that it affects the market one way or the other. People would rally around those stocks and sell off or buy. Either the buy sentiments or the sell off would affect this largely. So I'll say that as a way. Not forgetting that recently, that's in the month of August, the inflation figure that was released saw a decline a little in the inflation rate. So we can say all this boils down to how these macroeconomic indicators play out, and also to some extent the sentimental focus of investors. So I'll say those play a very key role in the interest rates vis-a-vis the market playout yesterday.
Okay, you have spoken about some other sectors that are susceptible to, the MPR rise or increase, but I would like for you to be more specific. What other sectors do you think are, vulnerable to the MPR hike, and how should investors position themselves in these sectors?
All right, so Nigeria is a very dynamic market where you see the rise in the interest rates happens not to stifling the inflation, because that's what the focus was, or the focus is. Increase in interest rates is supposed to adjust, or would I say moderate the inflation rate, but we see the reverse happening. The increase in interest rates tend to cause an uplift, or would I say an increase in the inflation rate. So I would say, specifically speaking of all sectors, I'll look at the banking sector majorly, or we call it the financial service sector generally. It's going to be affected. I mean, when you say increase in interest rates, we are saying that the rate at which people get in the market is increased. So the banking sector will be largely affected. But like I said, that particular sector has been doing very well of recent. As you can see, they did a recapitalization, so the banking stocks are doing well, are smiling. As you can see, Fidelity and FCMB for the past 1 week so has been in the rise. I mean, in the very good position. So I'll say all sectors will be affected. Oil and gas sector, not taking that away from you, knowing that recently the prices of fuel, that's PMS, premium motor spirits, has actually increased, and this has a way to affect the market largely. You saw what Owando has been doing, at least for this quarter. Owando and Etana, they've been running around those stocks. So I would say those particular sector, the oil and gas sector, the financial sector majorly, but looking around, I'll say to touch all sector, but majorly the financial sector and the oil and gas sector. Thank you.
Thank you very much, Mr. Donato Zumana. And meanwhile, Femi Otedola has increased his stake in FBN Holdings with a purchase of 534 million shares. We will be discussing this and more after the break. Do stay. Mr. Donato Zumana, who is an investment analyst, is still on standby, so do stay. And welcome back from that short time out. You are still watching Business Daily, which is coming to you live on Trust TV. And just before the break, we started a conversation on recent developments in the Nigeria's equities market, especially since the conclusion of the Monetary Policy Committee meeting on Tuesday, where we did see the committee vote to increase the MPR by 50 basis points. But I still have my guest here with me, who is an investment analyst in the person of Donato Zumana. Thank you again for coming on the program this morning.
Thank you for having me.
Thank you. And we'll just begin again by one of the recent developments that the market have witnessed, speaking about the increase in stake of FBN Holdings by Femi Otedola. He has, bought over 534 million shares at 30 naira per share. I will want to hear from you regarding how the markets are reacting to this action, this specific action.
Right. Olufemi Otedola, the current chairman of FBN Holding, I would say he's a businessman. So when it comes to the power tussle, it's not a new thing between him and Barbican Corporation. That's the owner of it. That's Otu Deco. They've always been a tussle of power of who to own the highest shares when it comes to FBN holding. They recently acquired 534 million, like you said, addition in the value of 16.1 billion. I would say it's a sentimental market on the long run. So this particular information would actually cause rallying around the stock. Even looking at the dividend that was declared, quite I would say on the low side from a tier one bank, but at the same time, it's a constant rally around the stock generally. I mean, people are always moved by major market mover, and in the case of Femi, you would say is one of the very high worth individual in the market. So people would rally around FBN. I'll say the market will react to that in a positive way, but at the same time, like I always say, not just sentimentally buying stocks, but fundamentals should guide how you invest in a particular company. Thank you.
But do you foresee these, impacting the stock price in, the short term? And you talked about how you do expect for investors to rally around the stock, but do you also foresee this impacting the stock price?
When it comes to the stock price of FBN, currently is trading between that's the price he acquired is trading between that price. I would say on the long run, looking at FBN, you can't tentatively say what it will print out. I mean, we've seen assets in recent time go as low as 19 naira, 50 kobo, and trading around that. And we see other tier one banks, UBA and Zenith doing at least a little bit higher than what they are doing. So in the case of FBN, I would say we should expect, let's say, high and low between that range of price. We can't say, because if investors rally around the particular stock, on the long run, it will cost a hike in the price. But what is the long-term plan? Because after rallying around, if by the time it gets to a particular price and these key investors take out profits, I mean, it will allow the price to fall, back to where it previously is. So I would say people should be, investors should be cautious, knowing that Otedala is someone who would actually want to record profit from whatever he's doing, like every other businessman. So it's looking at the particular stock with an eagle eye, I would say. So with know when to, go out or exit the position of that stock, even as you are trying to rally around it. Thank you.
Well said. You made a comment earlier on in the conversation where you compared, the market's reaction to the increase in MPR. You said on a normal or in normal circumstances, an increase in MPR should deflate inflation, but the opposite has been the case. So I would like for us to juxtapose, the reaction of the equities market to, inflationary pressures that are currently still being faced. I mean, since the primary goal of the MPR is to curb inflation, how would you say inflation has influenced investors' decision in recent times?
All right, so I'll still also want to take you back to the beginning of the year. Now, you saw in the beginning of the year when there was a massive increment in the interest rates, moving from 18.75 to 22.75%. We saw that the fixed income market became very attractive all of a sudden. Like I said, these two markets dynamically, the fixed income and the equity market, they work, how would I say, in reverse proportion. When there is a rally around in the fixed income market, the equity market seems to have a calm, or would I say, a moderate and steady movement. So the interest rates affecting the equities market, or would I say, the impacting on inflation and also the market. This time around, I would say it's a period where we might still expect rallying around in fixed income, because if you look at globally, you said it 4 years running, US just cuts down on their interest rates, and as well the UK market, the UK kept their interest rates, no increments, no decrements, and people, I would say most analysts were expecting a cut in our interest rates. But I mean, the reverse happened, and he gave his reasons why. The CBN governor gave his reason why there is an increment. He said penetrating core inflation. Yes, it's looking for a way to stabilize it, in as much as it seems not to be working. But it's still looking for a way to, curb and penetrate the core inflation. Also, is looking for a way to stabilize the exchange rate, enhancing what investor confidence. So I would say, on the long run, interest rates might achieve that particular objective of the CBN in trying to moderate the inflation figure. But as it stands, and I mean, I quote him, that as long as the inflation value keep rising, there will be a steady increment in interest rates to try to curb it. But like I said, Nigeria is a very dynamic country. I mean, seen in recent times that it's I would say a non-elastic market, or would I say a perfectly inelastic market. So on the long run, we just see how it plays out.
Well, indeed, we'll keep our fingers crossed and remain optimistic that, this change in policies will, in the long run, have some positive impact on the market. But one thing that we seem to sometimes sweep under the carpet is that there was also the increase in the cash reserve ratio for, commercial and merchant banks. I will want for you to speak regarding that, the reaction of the markets to that and the capital market as a whole. Has there been any, changes or obvious reaction to that decision by the CBN?
Well, like I said, that will majorly be the impact on that we've seen really in the banking sector. When we say the cash reserve ratio, then the money, or would I say amount of funds that are with CBN, that means each bank's deposits, a reserve that's not been touched with the CBN, so it's increased. And you see, recently, like I said, there was a massive capitalization, so there will be a lot of liquidity, flowing around, an influx of liquidity. So I think the CBN, on its long-term measure, is trying to curb excess liquidity in the system. So if we increase the cash reserve ratio, that means, for example, if a bank is having, let's say, 10 million with CBN, and the cash reserve ratio has been increased by 100 basis points, so we are expecting an additional 1% increment in that particular figure. So it's a way of the CBN trying to mop out the excess liquidity in the system and making sure that on the long run, the liquidity is stabilized. Like I said, you know what inflation is? Inflation is lots of money, or would I say, yes, lots of liquidity chasing fewer goods. So the only way to maximize, or would I say moderate this, is trying to mop out the excess liquidity in the system. So I think the CBN looked at this and tried to increase the cash reserve ratio in order to moderate that particular problem. Thank you.
Okay, we are approaching the end of the month of September, and that also will herald the new quarter. We are, slowly rather moving towards the fourth quarter of the year. So many expectations for the fourth quarter, even as we approach the end of the year. But I would like for us to speak regarding, future market predictions. What do you expect the central bank, or do you expect rather the central bank to keep raising the MPR, even though you did say that Yemi Cardoso stated that as long as inflation continues to abound, there will be the continuous increase in MPR. But at what point do you expect for a pause to happen?
All right, so expecting a cut in the interest rate. You would also observe that inflation, there was a cut in the last inflation figure, and we all know why that was. We saw that before the increment of the PMS and the sharp increments, there was a policy, yes, where the CBN, in conjunction with other policymakers, reduce, or let's say remove VAT from core consumer products. Yes, there was a removal of VAT on those. So that's
are you referring to the food importation?
Yes, exactly. No, not food importation. Yes. Vis-a-vis domestic product too. So there was a cut on VAT on that. I mean, removal of VAT on, they call it necessary products. Yes, necessary product. That's product that we use in our houses, household products. So there was a removal of VAT on them. So it impacted the inflationary figure. And then analysts, I would like to say analysts, rather, came out and said we should not be deceived. I don't expect us to be deceived by that little reduction in the inflation figure, because before the end of this month, in short, the month already, you see the increase, the hike in PMS already has actually caused a lot of inflationary measures to increase. So I would say, looking at the long term, the CBN would continue to increase the interest rates until they can actually find the solution in curbing inflation.
What about your predictions for inflation? Already you've made it clear that the reduction in inflation figures that we received from the MBS was seasonal, and that was due to some policy measures that were taken in the past month. Do you expect to see the downward trajectory in inflation rates moving forward?
Okay, for inflation figure, we saw 22.79. That was, I'll say,
Mr. Umana, can you hear me?
I would say, hello, can you hear me?
Yes, please, go on with your thoughts.
All right. So I would say inflation, we will be expecting an uplift. I would say not a decline, an uplift, because, like I said, the oil and gas sector, which is one of the major sectors in this country. I mean, everybody uses fuel, from household to transportation. A major source of transportation depends on PMS. So I would say we'll be expecting, the inflationary figure to increase. Also, not forgetting the recent flooding in the northern part of the country, which is also one of the major food baskets of the country. So I would say this will also have a way of impacting the inflation figure. So I would say we should look out for an increment rather than it cutting down any further.
Unfortunate events, like you've rightly mentioned, talking about the flooding in certain areas across the north and how that will impact, especially on food inflation. But I will also want for you to speak regarding, what we should expect come from the equities market. I mean, we did see the NGX emerge as one of the best performing stock markets in the year 2023. Should we anticipate that to play out again in the year 2024?
Well, in the year 2023, you will see that was as a result of long distance between. You see, the last time the interest rate was increased was July, and then from July to February. So that point in time, we could not measure the growth in the NGX market. Like I said, if we look at the year to date in the NGX, hovering around 31.33%, and compare that value to your inflationary value, you would see, looking at it, ideally, the market has not really done substantial progress. Yes, comparing that to the inflationary figure. So I would say, ending the year, we might see an increment in the market. Yes, looking at the last quarter of the year, the outlook, the market might emerge as being one of the best in the world. But at the same time, comparing that to your inflationary figure, because the true growth is when it crosses the inflationary figure. Yes, that's when you can actually ascertain that, yes, there is moderate growth in the system. So, but generally speaking, we're looking at a positive outlook, like I said. So we're seeing the banking sector rallying around. We see other banks have not come into the market to raise funds. So those also will allow the market to rally for the last quarter. And not forgetting also that it's a dynamic market. So we can see a reverse in that on the longer. But I'm saying optimistically that the outlook for the last quarter will be a positive outlook.
Well, we'll keep our fingers crossed. But before we go, I will not let you go without you giving us an idea into, the opportunities that we can tap into in the market. Of course, we did talk about the recent losses that the market has witnessed. But are there any other opportunities within the NGX now that investors should be keeping their eyes on, particularly with regard to the undervalued stocks or sectors that should benefit from the policy adjustments?
Okay, I'd say one of the sectors that will benefit from the policies, looking at the insurance sector. Yeah, insurance sector. There's a lot of I wouldn't call them penny-wise stocks, but there are stocks that have potentials of growing. We've seen one emerge recently, Alex. We also saw some banking stock. After the public offer, such the Fidelity is one of them, doing as high as 17 naira at a particular day in the market before it came down to 15 naira. So, imagine stocks like that who did their PO around 9 naira and 7 naira. We have the likes of Fidelity, we have the likes of FCMB. So these banking stocks have potentials, to expand, and do better. We have Etana, we have stocks. There are some stocks in the market still doing the right issue. We have Nigerian Preways. We also I don't know, for me and Honeywell doing something in the market. So these are sectors which are these are stocks that are caught around those sectors: consumers, industrial, and then the banking sector, and as well as insurance. So I would say for every investor, you should do your due diligence. You would be well informed on it. But generally speaking, there is opportunity in our sector, and looking at the insurance sector as a keynote to look at. Yeah, there are stocks there to take position in, and the investors will smile at the end of the year.
Indeed, it's important that you do your due diligence, but then again, maybe you should, be looking in the direction of the insurance stocks. This is according to my guest, who is an investment analyst in the person of Donatus Umana. Thank you very much for all the insights that you've shared with us on today's edition of the program.
Thank you very much for having me.
Very, very insightful conversation on the performance of the equities market, especially since Tuesday, where we did see a hike in the monetary policy rate by the Central Bank of Nigeria, about 50 basis point increase in the MPR. But we will want for you to keep the conversation going across all the social media platforms, on YouTube, on Instagram, on Twitter, which is X now, of course, and on Facebook, on TikTok. Just keep the conversation going, and we will be with you rather to engage on your thoughts today. Thank you for watching. My name is Chiamaka Nendu. Bye for now.